Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at CRO. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. And if you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. And now we can jump into the charts. Now, taking a look at the daily chart, let's zoom out first of all, and I'm going to show you how I've set up the Fibonacci retracement. Usually I have the same Fibonacci retracements. I rarely change them, specifically the larger ones. And we have our swing high printed in November 2021. And we have our swing low printed in January of 2022. And we are way below our 1.618 target. As you can see, we're way below the 2.414. So what we could do in this instance is we double click any Fibonacci level, and we get the settings menu for the Fibonacci retracement. And what we can start doing is we can start adding more Fibonacci retracement levels to see where our further support trend lines are. Usually I don't go anywhere below 2.414, but for this Fibonacci, we could have more extensions. So the 2.618, okay, what else we can get? We can get the third Fibonacci level there. What else we can get? The 3.272, right? Let's have that. And the reason we're adding these is because we want to see what are the next support levels. And if you see the 2.618 perfectly aligns with the bottom that we have over here back in December of 2020. So it all plays in nicely together. So this bottom here that we printed is sitting at, let's see, sitting at 0.0058 roughly, right? Yeah, around 8. So we've retested that bottom, technically speaking, because we retraced all the way back down to this low. And hopefully we're not going to be losing this low. Hopefully we're going to see a nice retracement to the upside for CRO, at least coming back into the resistance block, into the blue resistance block above us, and coming back down for a higher low. Hopefully that's what's going to happen, because if you start losing this low, that's going to be bad news for Crypto.com or for Cronos. Now, that is, of course, if there is not going to be any more FUD surrounding their proof of reserves. And like I said, holding your tokens on centralized exchanges is very dangerous. I almost don't have any coins on centralized exchanges. I only have a bit on KuCoin, and that's it. But I don't really think KuCoin is in danger. However, Crypto.com did have some shady transactions, so I would be careful with that. And they did have some shady token lockings for a guy I knew. He had 700,000 Crypto.com tokens locked up in staking, and they froze his account, and he wasn't able to withdraw them at the peak of the bull market. And when they unlocked the account or unfroze the assets, the price already dumped down. So that was a pretty weird thing. And I just drew another Fibonacci retracement, as you can see, but this is a larger one. And if we start losing this low that we printed in December 2020, which we are, to be honest, on the verge of doing that, then your minimal target is going to be at 0.0234 cents. Okay, that's going to be your minimal target. And obviously the 1.618 target is all the way down here, but I don't think we're going to be going below 1 cent for Crypto.com. But hey, anything can happen in the crypto markets. You should be ready for every single possible outcome. But that does not mean that, you know, we can say things like Bitcoin's going to go to $500 and I'm going to be waiting to buy Bitcoin at $500. That's just gibberish, right? Or that's rubbish, as some British would say. But yeah, so set up your buy limit orders in advance. That's what I would be doing. So taking a look at the Fibonacci that we have on the chart, zooming into some of these levels. So the 2.618 is where we are at right now. Next up, we have the third Fibonacci level, and I would set up some buy limit orders anywhere between these two levels here. So this whole buy zone here, that's going to be a great accumulation zone for crypto.com, but then again, that would be negative on a technical standpoint because we're going to be losing this support level, and this is a pretty important support level because we've really never gone below that on the KuCoin chart. So this low right here is a historically important low, and we start losing that, we're in the uncharted territories and we don't have any data below here to go off of. So it's going to be interesting to see what happens with crypto.com. However, if we do see some sort of shady activities going on, then I would stay away from investing into these into this CRO token, because personally, I'm not buying any CRO tokens at the moment. If the price dumps all the way down to, let's say below 3 cents, and we don't see any shady activities and nothing really weird is going to be happening, and it seems like the bear market is over, then I'm going to be dollar cost averaging into CRO. For now, there are a lot of other altcoins that I still haven't bought into that I really want to buy into. So I'm patient, we still have time. So as you can see, we also came back down into this support block that I gave you in the last video, which is in between 0.0621 and 0.0549. And this was based off the low that we printed November 14th. And we came back all the way down exactly pinpoint. I don't want to be that guy, but I told you so. Look at this nice bounce that we got here. And this is around 8.5%. You're already up 8.5%. And what we are doing right now, if you've been watching my videos for quite a while, you can probably tell, we lost the support of the channel down pattern, as you can see. And now we're coming back up to retest that level as resistance. And I think there's a good chance that we're going to get sent back down, potentially even losing the support block. Now, I do think we may even wick a little bit into the channel down pattern and get rejected from the 20 EMA, which is the yellow resistance trend line. So if you bought in at this swing low here, potentially, and you don't want to hold it long term, you just want a little nice trade, then I think 8% is pretty good in my opinion. But yeah, obviously I'm not a financial advisor. You can do whatever you want with your money. But this was a nice little setup that we had here, and this played out quite nicely. Now jumping into the daily RSI, let's see what's going on here. All right, so we do have the two trend lines, and obviously we went below both of them. So this is the yellow trend line, and as you can see, we were adhering to it all the way back in May and in June, but right now we're not really adhering to it. I would say the orange trend line is the one that's a bit more important, since we had way more touches off of that one, and we could potentially run into it over here just right now. If you see it going into the orange trend line and you're looking to take profits based on probability, that's a good level to take some profits at. Not saying that it's going to dump down immediately, but I'm just saying based off of historic touches, this is a good point to take some profits. But if you're holding long term, I wouldn't be selling. I wouldn't be swing trading really at this point because it's very risky, and I would only be dollar cost averaging at very strong pullbacks. So if we do come back into the channel down pattern, which is this, as you can see, this channel down pattern that I'm talking about, if we do manage to come back into it and we have some sort of a relief rally and we even get a bullish cross on the daily chart, which is when the 20 crosses above the red 55 EMA, potentially we have a move all the way back up into the resistance of the channel down pattern and we get rejected back down. That's potentially what's going to happen because we have ran into that level 3 times previously since May of this year, and this could be a nice take profit for anyone buying in at these lows as well. From where we are right now all the way up to the resistance of the channel down pattern, that would be around about 70%. And I think that's a pretty solid trade, especially during a bear market. And you also got to watch out for the Fibonacci retracement levels that you have here, the 2.414, the 2.272, and the resistance block that we still haven't retested. We lost it here in November, but we haven't had the retest of resistance, so you have to keep that in mind. And obviously that is based off of these lows that we printed back in summer of 2021. So if I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to check out my Patreon for more exclusive content such as podcasts and my low cap gems that I'm researching and dollar cost averaging into my portfolio, and a whole bunch more. Thank you for watching, and I'm going to see you in the next one. Goodbye and good night.